Hi, Clint Coons here with Anderson Business Advisors, and in this segment, we're going to cover wholesaling real estate. That is, how to structure your wholesaling deals with your current business entities. Now, if you're a wholesaler, you got to remember the entity you want to run those wholesale deals through is a corporation, preferably a C corporation. You don't want to be doing them in your own name, because if you're doing the wholesales in your own name, you have personal risk exposure to any liability, number one. Number two, it's all active income. You can be tagged as a dealer, and we don't want that dealer stain to come hit us individually. So we want to run it through a C corporation. Now, the question then becomes, how do we create the wholesale deals in a very efficient manner using our corporation? Because as you know, if you entered into a contract to buy a piece of property and you intend to assign that contract to someone else and you did it in the name of your corporation, well, the problem is that that purchase and sale agreement prohibits an assignment, then you've just given the seller a way out to void the agreement, because as soon as you move it off to a third party, he cancels it and refuses to close because the contract prohibits an assignment and he keeps your earnest money. So what do we want to do then? Well, we don't want to assign from our corporation. We need an intervening structure, something set up to hold the rights to that agreement that is easily assignable to a third party, that will not allow a lender to void out the agreement, and it preserves our ability to make money at the least for the least amount of cost. What we're going to use there is what we refer to as our wholesale trust. This is a very specific trust agreement that we at Anderson have spent years creating for our clients, and it's designed with you in mind if you're a wholesaler. It's to go out there and do just what I described, make it really easy for you. So here's how it works. First thing you need is your corporation. So you set up your corp. Now, this corporation can be anywhere. It doesn't really matter. You're not limited to just having that corporation in the state where you're doing business. However, for most of you, it will be set up that way, and there's no problem with that. Now, your corporation's set up, and you're an officer of this company. And you see this individual over here who has a piece of property for sale, and you would like to tie it up under contract so you could then wholesale it to this person down here who's an avid real estate investor. So the way we set that up is we would create a trust right here. This is my wholesale, I'm going to call it WT, my wholesale trust. Now in the trust, you have a few parties that you need to be aware of. You have the trustee and you have the beneficiary. The trustee is the person who controls the trust that will close on the deal. The beneficiary is the person that owns the trust. All right, so they get to receive any benefits that comes from any of the assets held inside of that trust. So what I will do here with this wholesale trust is I will be the trustee of my wholesale trust, and my corporation will be the beneficiary. So we'll put down here Benny is Corp. So I create the trust, and I'll typically create the trust in the name of the address of the property that I'm looking to make the offer on. So if this was 1845 Olympic, Olympic, it was 1845 Olympic, then that's what I'd call the trust, 1845 Olympic Trust. And you can just write this out as you're looking at the property that you intend to put in the offer on. So I'd write off 1845 Olympics, name of my trust, Clint Coons, trustee, beneficiary, ABC Corp, just like that. Now I've got my ABC Corp as the beneficiary, I've got Clint Coons as the trustee, and I've got my trust name, and the date is the date you sign it. I'm ready to go. I'm ready to put in that first offer on that property. So now I contact the seller here, talk to him, enter into a contract between the seller and my trust to buy this property. Okay, that's step one. I've got the property now tied up. Step two is to talk to this person down here and sell them the rights to close on that house. The way we're going to do that is we're going to sell them the beneficial interest in this trust. So this person in turn will pay, if they want to take it over, my corporation money to have that trust. So when you do that, what occurs is your corporation is no longer the beneficiary because you've sold that interest. So we take your corporation out of the mix. Okay, we transfer the beneficial ownership to this person over here, the investor. Then you're going to resign your position as trustee, and you're going to turn that position over to the investor as well. So the investor now steps into your shoes, owns the trust. There's no longer a connection between you two. And then now the investor can then close on the property. They own the property through the trust and they're free to do what they want. Your corporation, of course, received that fee. So you have that fee income over here. That money now can be used to reimburse yourself for your startup expenses, pay yourself a salary if you're at that point, maybe go out and start doing some flips. The point is, there's an easy way to set up wholesale deals. And it starts with the Wholesale Trust. My name is Clint Coons with Anderson Business Advisors, and in this segment, we covered how to structure a deal with a wholesale trust.